Hey, this is the Prophet with Nick Black. It's time to chit chat. You know nothing about blockchain. We here to fix that. You want the news on them new stocks? This where you get that. So go and grab you a nice chair. It's time to sit back and talk to Prophet. Hey, hey, you talking to the Prophet. Hey, hey.
So that is the McLaren Artura. It's 2021, 680 horsepower. It's an electric gas hybrid. It's supposed to be pretty dope. They don't ship until the end of the summer. So that's frustrating. They're like, yeah, just put your down payment and blah, blah, blah. And I was like, I'm out. I'm not taking money out of Bitcoin to buy a car that I can't tell. It's like, put a down payment on a car. You crazy? 10 grand in Bitcoin. You know what that's going to do over the next 6 months? Kiss my grits. Anyway, so that wasn't happening. Cool car though. Cool car, bro. But we're gonna pick something else up today, and once we pick that up, we'll I'll show you guys. That's gonna be a lot of fun. Okay, let me say hello to a few people. Let me start with my amigos over on Clubhouse. We have Antonio and Alexander. We have Dwight, Mano, Michaela, Ryan, JD, Denise, Akram, Lance, Kenny, Abe, Lynette, Marilyn, Carlos, Alan, Patrick, Roger, Julie. That sounded like I was going through like the phonetics, like in the military, like Roger, Patrick, Alan, Julie. Yeah, anyway, whatever. Okay, P. Kelly, what's going on? Brady, what's up, man? Sylvia, Jimmy James, Tom, what's going on? The voice of reason. I don't know if I'm the voice of reason, but I will tell you this, and we could probably explain it, but Alexander and I game theoried our way into flipping that $14 pack into, I think the total net was $1,130 or $1,134. Anyway, off a $14 NBA Tops pack. Now, we haven't gotten one since, so that's been kind of a kick in the softies, but you know what? That's not a bad return. It might almost buy an Ethereum token. So that's kind of cool. You imagine $14. I got Ethereum for $14. Not yet, but maybe I'll put it into Hedera. Maybe I'll put it into one of those coins that I wouldn't normally buy because they're junky. P. Kelly, what's going on? Ivan, what up, man? Scott, Ivan, I just saw, well, I was going to see Lowell and we crossed paths at the coffee shop, but I was running over here. Okay, so we're going to get the show started. When we come back, we're going to go through prices. We're going to talk about a lot of stuff. There was a settlement, at least a perfunctory settlement in the Tether, ongoing Tether craziness. We're going to talk about that. We're going to talk about one of the reasons this whole sell-off started on Sunday. We talked a little bit about it yesterday, where we kind of unpacked what happens with these cascading liquidations. And we're going to explain a little bit more because you guys need to understand that as you take, I even have my whiteboard, which is a blue board, and I might even attempt, if you guys want, I might even attempt to show you guys on the whiteboard what I mean by this, but I'm going to try to use my words because people on Clubhouse can't see what I'm doing. So I have to use my words. I don't think pictures will work for them. So I want to be good to everyone. So yeah, we're going to talk prices. We're going to talk just for a second, Janet Yellen. Who? Janet who? What a nothing burger. Everything she says is just, ugh. That's all right. She's like 9,000 years old. Doesn't matter. She knew Methuselah. They were like homies. Let's see. Brady, we will get to that. That's actually a good question. Yeah, and Brady, if you'd been here yesterday, we talked about that for like 25 minutes. Duh. All right. So let me go. We'll do these little opening graphic-y things, and we'll be right back, and we'll have a little fun. I will see you guys in about 30 seconds. All right, we're back with a little crypto and coffee action. What's going on in these markets? All right, before I get into all the details of it, let me just say a couple of things. One, I probably need to find a way to pop up the window for the people over at Theta. For whatever reason, this platform, it sends to Theta, but it doesn't retrieve. So when people ask questions on Theta, I don't see it in the dashboard, which is weird. So we're going to try to figure that out. But hello to everybody on Theta. You're not ignored. We know you're there. All right. Let me say hello to, if I didn't say hello to Scott, Ella Paul, JJ, hello to everyone. Okay. What's going on with Bitcoin? The corn is currently 48,309 bucks. It's been all over the place. It's down 10% on the day, down 1% on the week. It's still way up on the monthly, on the yearly. It's almost 400%. Ethereum, 1,581 bucks. Hey man, it got down in the 1400s yesterday just for a second. It's down about 10.4%. You see what's happening here, right? These assets are tracking very closely together. And you start to see some similarities. Bitcoin and Ethereum tracking together. Polkadot and Cardano tracking together. Interesting, is it not? XRP and XLM tracking together pretty much by about, off about, we'll get into it. But anyway, Ethereum's at 1578. It's down 10.5%, 11% on the week. It's not having a great week. Some would say it went too far, too fast. Well, actually, everybody would say that because that's why it's red, right? Polkadot, 34 bucks, 30 cents. Not a bad point to get back in if you think you missed the Polkadot boat. It's down 6.8 on the day, but it's up 13 on the week. Cardano is at 96.7, basically 96 and a half cents, we'll call it. It's down 6.5 on the day. It's performing a little bit better. In the top probably 10 assets, it's the best performer. It's still up 10.7 on the week, 177 on the month. And guess what happens tomorrow? If you're a Cardano fan, you're very excited about tomorrow. My guess is Cardano starts to buck the trend, similar to Cosmos. We'll talk about that. XRP, 47 cents, is down 20%. Well, no GD surprise there. Like everybody that was like, woo woo, we're mooning. No, you weren't mooning. It was being pumped in a pump group. MoneyGram just cut ties. MoneyGram, the same MoneyGram that took a $61.3 million check from Ripple. They cut ties with Ripple. We're cutting ties. You're cutting ties. Bitch, you don't even have a company. MoneyGram, what is MoneyGram? Does that even exist? They lose so much. They're hemorrhaging cash. My guess is MoneyGram does not make it out of COVID in a meaningful way. It will be sold off in bits and pieces. On this one, I'm on Ripple's side. If I'm Ripple, I'm like, F you, MoneyGram. I would say some other cuss words too, if I was Ripple. So anyway, yeah, they're down at 47 cents. They're down 20.5% on the day. Listen, do your due diligence. Common sense, just common sense. You don't even have to be a genius. You don't even have to be all that smart. Just common sense. Everybody in the United States is cutting ties with Ripple until this is solved. Even if they like the company, even if they like the proposition, even if they love the asset, love the technology, even if they're sweet on the software, even if they give little smooches to Brito and David Schwartz, right? Even if they give back rubs to Garlinghouse and Larson, it doesn't matter, right? A company can't enter into a relationship with another company that's got the empirical SEC standing on their neck. They just cannot. And so I don't know how much longer people are willing to sit there and miss, trust me, the bull run that everybody talks about that I don't think is a bull run, these network effects, they're happening. And when everybody's like, I don't want to miss the bull run. I don't want to miss it. If you own XRP, you already missed it. Dummies, you already missed it. Just go down the list. The worst performer is 184% on the list. XRP over the last year, 73%. 74% of that 73 was done last month. This thing is not the kind of place where you want to keep a significant amount of money and warehouse it there. Just your money might do better in other places. You can always come back to XRP after this legal quagmire is settled. It doesn't mean you're not breaking up. You're just saying, hey, I'm moving away. I'm going to college. We're still going to talk. We're still going to like write letters. I'll write you every day. It's okay. All right. XLM, which is weird because XLM is kind of trading with XRP. You notice these things. Bitcoin and Ethereum trading together within about a tenth of a percent. Polkadot and Cardano protocol layers trading together, very similar. People are starting to group them in their minds, and I think this is actually good. XRP and XLM, 19.5%, almost 17%, they're trading together. It's very interesting, these parallels. The only difference between XLM and XRP, XLM's done 458% over the last 12 months. Yeah, XLM done real nice. That's like a 6x. More than 6 times the performance of XRP. You want to know which bridge asset to invest in? Well, numbers do not lie. XLM's 38 cents now. Under 40 cents. It's a pretty big drop. It's dropped 20% in the last week, but it's still up 43% on the month. Very interesting. Cosmos up 10% on the day. Ooh, look at Cosmos. It's down 16% on the week. But you know what? It's nice to see some green. It's doing pretty good on the monthly. Up 166. It's doing good on the yearly. Up 368, almost 369%. Yeah, that's 5 times as good as it's not fair to compare it to XRP. You would lump this asset in with Ethereum. You should lump it in with Ethereum, Polkadot, Cardano. And if you want to lump it in with layer 1, kind of new layer 1, Renaissance layer 1, you would go Polkadot, Cardano, Cosmos. You put those in the same basket. Although, obviously Cosmos hasn't proven itself yet, but I think that there's going to be a space. They're going to have partnerships. There's going to be some migration of designers and software engineers over to Cosmos. Cool. Theta, sitting at that $3 mark, but it used to be sitting at the $2 mark. So that's pretty cool. It's still up 19x on the year, 56% on the month. It's pretty kind of down. It's down 7 and change, about 8% on the week, 8% on the day. So pretty much the carnage of the last 3 days has taken its toll. Neo's down 19%. Neo got kicked right in the taint. It's still up 184% on the year, though. Up 60% on the month. It's just gotten crushed during the last day or two. VeChain took a big hit, down 16.7%. Listen, all these assets are getting flummoxed. It is what it is, right? They're getting punished because they moved so far, so fast that when Bitcoin got gutted, everything went with it. It's not like everybody all agrees that all of these assets are worth 20% less. Bitcoin is the ocean. All of these other assets are the boats. Some of them are big boats. Some of them are little dinghies. But where Bitcoin goes, the rest of the market goes for now. Until there are more pairs, more dollar pairings. I believe when there's a dollar stablecoin, an actual US issued dollar stablecoin, things will change. We're going to talk about Tether in a second. Graph token, $1.66. If you think you missed the graph train, might not be a bad time to take a second look. It's down 19% on the day, 20% on the week. So basically the days where all the punishment happened. It's still up 200% on the 30-day. And if you started looking at it like we did, around 30 cents, 25 to 30 cents, you're still up a good 5.5, 6x. Pretty good. And you can stake. The problem with the staking with Graph, I will warn everyone, is that you're stuck in that staking mechanism for 28 days. When you want to unwind your Graph tokens, it takes 28 days to unwind those. So I'm leaving them. I'm staking. I believe in Graph. I like some of the things that they're doing, and I believe that they're going to be around for a long time. So I'm not touching nothing. I'm staking. Well, what choice do I have now? Just give me some free tokens, fellas. I'll take them. Near protocol. For those of you that think you missed Near, this may be one of the only times you can grab this asset on the cheap. It's $3. 3. Uno, dos, 3. This is not nothing. So what I would tell everyone is, pay attention to this. If you're looking for protocol layer solutions that have been overlooked by most people, and you want an edge, and you're looking for the next Polkadot, and you're looking for the next Cosmos, I mean, look at all of these assets and what they do. Again, you have to compare the token, the actual supply of tokens unstaked, because the metrics change a little bit. You can't just look at market cap. You need to look at the available supply. Like, for instance, if you look at the total coin issuance of Cardano, you'd say, oh, there's 45 billion. But what do you know about that? You know that 75, approaching 80% of those tokens are staked, meaning there's only about 9-ish, 8 to 9 billion free float tokens. Now you subtract out the treasury and what they own, you realize there's not a lot of Cardano left. Cardano at $1 looks tasty as shit. Near at $3, super tasty. So, pay attention. Can't buy near in Washington anywhere. Listen, use anybody that wants near that's having trouble getting it. Go to gate.io. I believe in the description of all these videos, there's a link for Gate where you'll get a 20% discount on your trades. I'm not telling you to use Gate. I'm telling you, Gate is amazing. Yeah. Okay. 2 seconds. Let me see. I have to send. This is silly, but we have a guy coming. Can't get to him. He was 30 minutes late. That's what you have to do when you run like 14 businesses. Okay. Let me address Brady's question before we get going, because I don't want anybody to think that I'm ignoring you. Okay. So Brady asks, any correlation to BTC price drops and the negative Bitcoin funding rates? Well, yeah. So we talked about this a little bit yesterday, but when you look at the funding rates, which is the price that long positions have to pay in the futures market to hold those positions, the funding rate went from what is usually 1 basis point to 15 basis points, or 0.15%, right? You take 1%. Whenever you hear that, basis points is kind of confusing, but they use it to kind of big up the number. If you have 1%, that is 100 basis points. So if you break 1% into little bitty pieces, into 100 pieces, think of 1% as $1. Basis points are pennies. So the funding rate went from 1 basis point, right? 1/100th of a percent, to 15 basis points, or 0.15%. That's a big deal. That's a 15x. It makes it incredibly expensive to hold those long positions. And every time that these things get out of whack, they get nuked. And so I'm going to say that, yes, Brady, that is true to a certain extent. Now, we're going to take a look at an article that explains, remember yesterday we were talking about, hopefully you remember, we were talking about that some people had started transferring Bitcoin over to Gemini when this funding rate got out of control to front run this, to essentially front run this trade, or to front run this ridiculous funding rate. And they know what we know. They know that there is this, again, this question of liquid going to illiquid. Liquid is there's a bunch of Bitcoin and it's on exchanges. Illiquid, a bunch of companies buy that Bitcoin, they take it off of the exchanges, they put it into cold storage, it is no longer available. Meaning, and let's just do a thought experiment. And this is not exact numbers, but just to give you an idea. There's 21 tokens out there, right? Let's say 3 of them are not available. So now we're down to 18. 6 of them have been lost. So now we're down to 12. 10 of those 12 have been put in cold storage. Now we're down to 2. We're down to 2 Bitcoins left. There was 21. Now there's 2. So each trade, okay, is 10.5 times more volatile in the way it moves the market. Does that make sense? Because you went from 21 Bitcoins to 2 Bitcoins. So when the retail market is trading those 2 Bitcoins, and even some of those are disappearing, it's getting less and less and less, it's eroding. Every trade is 10 times more volatile because those 2 coins are now representative of the entire retail market because all the other coins are gone. So you've gone from 21 coins, extremely liquid, well, liquid-ish, to 2 coins, extremely illiquid. I hope you guys get where I'm going with this. You went from 21 million potential tokens, 3 million of which-ish have not been mined yet, so they're off the table. 6 million-ish lost, so they're off the table. 10 million-ish, poof, gone in cold storage, right? So when someone takes, let's say, $156 million worth of Bitcoin and pushes it over to an exchange on a Sunday night, and then they short it on a variety of other exchanges with leverage, when they sell that $156 million worth of Bitcoin, it does the same amount of damage as $1.5 billion worth of Bitcoin instantly. And what do you think that does to people with leverage? Wake up. It's extremely volatile. And these moves, listen, there's nothing illegal about it. 100%. If I had enough Bitcoin to make a dent in the market and crush all of you guys, I would do it. Why? It's not illegal. And my job isn't to keep everyone happy. My job is to keep my investors happy or the people that I work for. Your job as a fiduciary, your job as a hedge fund manager, your job as a person that pushes money. Your job, each one of you here, everybody here that owns any of these assets, your job is not to make fucking friends. Your job is to increase value and meaningfully change your own life. And anybody that tells you different is a huckster. Oh, I'm here for the technology. Shut the fuck up. No one's here for the technology. It's cool. Technology is cool. You know who's here for the technology? People that don't own any crypto. The rest of us are here to make a meaningful change to our lives. And that is valid. There's nothing wrong with that. You don't have to apologize for that. You don't have to get chastised for that. So when people say, oh, I'm here for the tech, I check out. I'm done. Mute. I mute everything you say because your logic is flawed and it's unrealistic. Now, if you become a billionaire and then you want to come back and say, I want to make a change, I want to make the world a better place. Okay, cool. Well, you know what? It's a lot easier to be philanthropic when you're sitting on $1 billion, when your paycheck is 1% more than all of your bills, right? It's real easy to be a man of the people, but common sense. And when you need to take some of that value out of the market and you need to make your life better and you need to buy a car or whatever, or get your kids in school, whatever, don't let anybody give you that old weak hand. You got weak paper hand. Shut the fuck up, paper hand. Shut the fuck up. That's all bullshit. That's all bullshit by people that don't understand the whole idea of making a change to your life, right? You do you. If you need to take money out of this market, you get it out. If you're losing sleep at night, get out. Or at least like dial it down a little bit where you can get some sleep, where you can rest and relax. You don't want this thing to crush you psychologically. Okay? Don't let anybody tell you you were lucky. You weren't lucky. Nobody here was lucky. You guys all took the time, the effort. You sacrificed some of your time. You could be doing stupid shit with your friends. Go catch COVID. Go to a bathhouse, whatever you do. No, you decided to do some research to kind of provide for your financial future through education. So when anybody says, oh, you got lucky with that crypto. I didn't get lucky, dummy. You're waiting for a stimulus check. I'm making my own stimulus check, right? People that are mediocre are willing to accept excuses for their own mediocrity, right? Don't be one of those people who wakes up in the morning, throws their hands up. I want to be average. Woo! I can't wait to be average. No. And those are the kind of people that when they get into these markets, they might get lucky here and there, but it's not going to be any kind of sustainable progress. They're not going to be making repeatedly good decisions because luck is not a strategy, right? It just isn't. There's people that get lucky in DeFi. There's people that get, oh, I bought this asset, I traded to this one, to that one, to that. That's cool. Good on you. But making statistically sound decisions, you can repeat that process and you can audit it. You can audit your own opinions, right? You can say, oh, this doesn't seem like it doesn't mesh with the mathematics of it. It doesn't mesh with the market movements, things like that. You need a system, your own system, that is teachable, repeatable, and auditable. And if you can't do those three things to your trading methodology, guess what? You don't have a trading methodology. Your system is luck. You know what luck rhymes with? Duck. And duck is disgusting if you've eaten it. For those of you that like it, I don't agree with you. It's greasy and gross. It tastes like cat food. And yeah, I know what cat food tastes like because I tasted my cat's food because she looked like she enjoyed it so much. I was trying to figure out, why do you like that so much? Why do you derive so much more pleasure from that cat food than I get from this T-bone steak? And it turns out that cat food is disgusting and it tastes a lot like duck. That was a weird segue. I hope I've disturbed many of you with that. Don't think that that the cat food tuna is the same as sun-kissed tuna. No, those are not the same thing. Stories. And I don't even drink. All right. So let's see. Daraj, what's your opinion on the market pullback? I think this is actually very healthy. My goal is, and I'm going to show you this article here in a second. We're going to go through it. My goal is, I want to be able to recognize these setups for these sell-offs. And I've noticed that when we have weekends, and especially long weekends, it seems like every time we have a weekend where Bitcoin is going up into the weekend, we get crushed on Sunday, bleeding into Monday. And in this case, a lot of people got punished with these cascading liquidations. It starts with the big sale. So let's go with the big sale. Let's go talk about the big sale. Because what do we all want? We want an answer. We want to know, okay, what the F, man? What the jihad? What happened, right? Well, here's part of that WTF. So let's take a look at it. Boop. All right. We're going to get into the Tether thing, by the way. Which is pretty, it's a nothing sandwich, like we kind of thought. It's a nothing burger. But anyway, let's talk. Okay. Whale, who sold Bitcoin before 2020 crash, which is interesting because that crash was caused by one of the scammers putting 12,000 tokens on the market. It's kind of interesting that they knew about this. I wonder who this person or people is. I'm very curious if this has anything to do with the plus token scammers. They don't know. These guys are very clever. I'm going to read it after this delicious coffee break. Coffee's so good. There's like drugs in it. All right. Whale, who sold Bitcoin before 2020 crash, cashed out $156 million before this week's 20% dip. A serial seller with a lot of Bitcoin to their name chose to divest themselves of a large chunk of Bitcoin just before Monday's crash to 47,400. And we are currently trading at 47,500. So this is pretty apropos. And then there's like a little guy with his feet up and the market's red. He looks like he's chilling. I'm guessing that's Arthur Hayes. And he's chilling because he shorted the shit out of this market and he's on the run. All right. Bitcoin lost 20% in a day, partly thanks to the actions of a single whale, new research suggests. Now, nothing is one single person. We all monitor these transactions. We all see these things happening in real time. Yeah. But a whale can bring other whales to the party. And it looks like this is what happened. Data from on-chain analytics firm Santiment on February 23rd showed that the BTC USD pairing dipped to 47,400 after Bitcoin's second largest transaction of 2021 took place. Ghost of Bitcoin sell-off pass returns. The transaction, 2,700 BTC worth 156.6 million at 58,000 per token, resulted in a sale which piled pressure on the market. This snowballing into the largest 1 hour candle in Bitcoin's history. As the price gets bigger and the volatility increases and the liquidity decreases, we're going to see more and more of these near-term vacillations. You know, when you look really close, the Bitcoin chart looks like a Looks like my grandmother when she's on meth, that EKG. Out of control. All right. As we noted yesterday, there was an 11x exchange inflow spike that initiated Bitcoin's price correction from 58,300, the all-time high. Santiment wrote in accompanying comments on Twitter, further data combing revealed that an address was responsible for the second largest BTC transaction of the year, an import of 2,700 tokens to the wallet before a quick sell-off. I would be interested to see if that was a market order. If it was a market order, many things would be explained. Also, I would love to see if on Bitfinex, Binance, and some of the other exchanges where you can get some leverage, maybe over at the CME, if they took a short position and when they took that position. If they took a short position Friday, then this is really planned out. I'd be very interested to see how they took that and whether they took it directly or indirectly. Maybe they avoided the CME because they wanted to avoid US regulators. And if that's the case, wouldn't it be interesting? Wouldn't it be really interesting if this was the people over at Tether? I'm just going to throw this speculation out there. I have zero to back it. But wouldn't it be interesting? It's very tough to trace these wallets because these people have been bouncing these tokens around in a very clever way. The way you might do if you were, say, I don't know, laundering money. I'm just going to throw that out there. The findings shed light on exactly what was happening as volatility took over for Bitcoin, which managed to recover 54,000 before trading below 50,000 once more at the time of writing. Some believe the market was overextended, I for one, with naysayers in particular claiming that the bubble-like process had long been underway. Yes. Others argued that it was simply business as usual for crypto trading, but as Cointelegraph reported, concerns had mounted about unusual inflows into exchanges. When you see coins being dumped on an exchange to signal that they're selling, this is a very obvious signaling process. This is like the Federal Reserve. They don't do anything, they signal, and they expect you to behave, right? You see the signals, they say they're printing, they've never printed, but it doesn't matter. Because if you have a compliant herd of sheep that behave as if the Fed is printing, you get the result you want without ever having to actually print. In the same way that when you put a bunch of Bitcoin on an exchange, you can go sell those OTC. There's all sorts of ways you can dump those coins and the market would never know about it. You put coins on an exchange to signal to the world that you're about to dump that shit. You do it because you want that expectation machine to kick up. You want to manage beliefs. You want to push people into a panic. And then you've probably set it up with leverage to short it on other exchanges so that you make 17 times your exit on the way down. So even if you sell with a market order, you dump 2,700 tokens on an exchange or two, there's no way they can absorb that. Why? There's no Bitcoin left. You can't absorb that. There's not enough market orders. The exchanges don't have the cash to buy that up. No one can sop that up, right? You go over to Grayscale, you might make a deal with them. There's all sorts of places you could go to offload Bitcoin that would never show up. You can go over to Coinbase custody, right? There's people that'll move Bitcoin around all the time. You can do OTC transactions at Kraken, $100 million at a time. So when whales park crypto on an exchange, the intent is to fucking scare you. You guys need to know this. You're being chumped. However, you have a lot of people that don't understand how these markets work. And they tend to get caught up in the excitement. And they take leverage and they take leverage and they take leverage and they borrow against one asset. Listen, if you borrow against Bitcoin, buy more Bitcoin, borrow against that Bitcoin, buy more Bitcoin, borrow against that Bitcoin, buy more Bitcoin, you've taken 4x leverage on your Bitcoin. So if Bitcoin goes down 25%, you get liquidated on all of your loans. You're fucking done. Do you guys understand that? Don't take leverage on illiquid assets, man. Don't do it. You're gambling. You don't need to gamble. You'll do just fine by buying these assets with pure value, without leverage. You don't need to take on leverage. This is the greatest opportunity any of us will have. But invariably, some of us will give it all back because we're greedy and we want it all right now. It's okay to not have it all right now. It's okay to have it in 3 years. And for those of you that are holding and you're holding strong and this is no big deal, good on you. But remember, Simply holding and being unaware of the environment is also not a strategy. You need to understand what's going on around you. You need to understand what your risks are. This whole idea of illiquidity, it's important in where you park your assets and how you monetize those assets. So just keep in mind that, information is king. Even if you don't act on it, at least you have it. Okay. Santiment noted the same address had also sold immediately before the cross-asset price crash in March 2020. At the time, Bitcoin lost almost 60% of its value and hit 3,600. That was caused a few days earlier. A lot of people don't talk about this. They look at the treasury market route. They look at the market route in the equity space. They're like, oh, this is what it was. No, it was not. It was started by guys dumping 12,000 Bitcoin onto the market, starting from Thursday, running into that next week. Way before the equity market got kicked in the nuts. They were selling stolen tokens. They were selling, I think it was from the Plus token fraud. And there's still more of those tokens out there, but no one wants to talk about that. That's fine. I used to beat that drum. I gave up. Anyway, the same address also made a 2,000 BTC import last March, right as Black Thursday correction took place. It revealed in total, it's made 73 transactions in its 1 year existence for a total of 91,935 BTC imported. Ladies and gentlemen, that is what we call in the business a shitload, right? 91,935 BTC imported, with all tokens moving away within minutes after arrival. Sometimes they just park the tokens to create a market panic and they don't even sell them. These dudes are juicing the market. And if you're panicking, I would have said in the past, if you're panicking, you're falling for it. Now I would say, maybe if you're panicking, you're front running it, right? People that saw these transactions forming Sunday and got out of Bitcoin, you did real well. It's not that you have weak hands. It's not that you panic. Don't listen to any of these other assholes tell you, oh, you're weak. You're not weak. You reacted to information, and based on the past and the history of Bitcoin, when a bunch of monsters throw a bunch of Bitcoin on an exchange and they start selling it, people get liquidated. Common sense. So you decided to get on the sidelines. Good on you. All right. Whales in the spotlight. Suspicions had long been eyeing whales who had profited from small wallets selling during previous price dips throughout Bitcoin's recent bull run. As Cointelegraph, they always like to say as Cointelegraph reported. Bitch, everybody reported. You're not special. You guys just retread the same old bullshit articles. Don't act like you just solved pi for 190 decimals. Get out of town. Anyway, the number of whale-sized wallets have been growing while small holders have been decreasing. This is part of that move from liquidity to illiquidity as Bitcoin moves off of exchanges and onto corporate balance sheets and into cold storage. All right. The most interesting side-by-side story tells you how Bitcoin investor profile progress whales diminished as price elevated in the last cycle. New groups of whales just keep popping up this time, while shrimps, I don't even know what a shrimp is, are the weak hands. Are the weak hands who sold too early. Isn't that interesting how they make you sound weak if you sold and then the price went back down and you bought it cheaper? Does that mean, are you weak at first but then strong because you bought the dip? Like, at what point do you go from having weak, fragile hands to being strong and well-minded? Like, be careful of the verbology that they use to describe us, and kind of use that lens. Founding partner Dan Wovey tweeted last week, the great wealth transfer. Some responses to the research, meanwhile, noted that the wallet in question had been responsible for a fraction of total volume and that its influence should therefore be limited. We don't believe that one address alone triggers the price retracement of the largest crypto asset in the world. We certainly wouldn't want you to believe it either. Was this activity a contributing factor, though? Yes. So it is to say, when people are signaling, just pay attention to it. Don't ignore it. And what you can do, for those of you that are looking for ways to protect against this, for a mere pittance, when you see these kind of activities forming, you can have an exchange account and you can buy some put protection. Okay. So for literally for a few $100 per Bitcoin, you can protect all of the downside risk of your Bitcoin out for a week, 2 weeks, 6 weeks, whatever you want to do. So for those of you looking for a way to get insurance, you're like, I don't want to trade in and out of Bitcoin because of the tax implications and this and that. Fair argument. Go ahead and go take a look at LedgerX, the exchange. It's omni.ledgerx.com, or you can just look up LedgerX futures. And you don't need to trade the futures. You can look at the options market. And if you see these kinds of things forming, or if you see Bitcoin running up to ridiculous numbers, you can buy some puts for a few $100 per Bitcoin. And if you give a little bit back, let's say it expires worthless because Bitcoin keeps running. So what? You're up 10,000 in a week. You can't give back $20, $50. Buy some insurance. There's nothing wrong with it. You are a hedge fund manager. Everybody here, dun, 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 I give you the award of hedge fund manager. You are all now hedge fund managers. If I had a sword, I'll do that thing where they touch your shoulders. I was always like, I wonder if anybody's accidentally been cut, like the king like sneezes at the wrong time and then like the sword goes over and like cuts him in the neck. And then you like, if you're a knight or whatever, or you just got knighted, what are you going to say? You just cut me, king? You know, you have to pretend it didn't happen because like he's the king, even though he has like Tourette's or whatever. I'm just saying. Okay, let's talk about Tether because everybody's like, oh, Tether, fucking boo-hoo, it's going to blow up the world and we're going to all die. And it's a big nothing burger. Bitfinex, Tether must stop trading in New York and pay $18.5 million fine. Ooh. Let's see. They printed, I don't know, 18 billion in fake money in the last 12 months. They got an $18 million fine. Are you kidding me? They wipe their butts with 18.5 million. You thought I was going to say asses, didn't you? You did, because I have a nasty mouth. All right. The NYAG is requiring the Bitfinex and Tether stop operating in New York. Like anybody operates in New York. New York's the worst. I feel sorry for you guys. If you're in New York, you can't do nothing. All right. New York Attorney General James has required Bitfinex and Tether to stop trading in New York, according to a statement today. The two firms will pay $18.5 million to settle, which, again, this is dust, dude, dust. Bitfinex and Tether recklessly and unlawfully covered up. By the way, look how mad they are at Tether, and this is an $18.5 million settlement check. I want you to contrast that to how people think Ripple's just going to get out of Ripple's little situation. If you judge the fine by how angry they are charging Brad and Chris with 1.3 billion. You see, one could use kind of simple napkin psychology math to say that the New York, the Southern District of New York is 96 times angrier at Ripple than they are at Tether. And they're pretty angry at Tether. Just keep that in the back of your mind. Anyway, Bitfinex and Tether recklessly and unlawfully covered up massive financial losses to keep their scheme going and protect their bottom lines. Okay, so what? Said Attorney General James, Tether's claims that its virtual currency was fully backed by US dollars at all times was a lie. Yeah, true. So is the US dollar. Total lies. Got it. These companies obscured the true risk investors faced and were operated by unlicensed and unregulated individuals and entities dealing in the darkest corners of the financial system. Yes, also true. Does anyone here care? Does anyone in the whole world care that bombs and missiles and chemical weapons and fucking slavery and all of this shit was done with the US dollar and still happens every day? No one fucking cares. Why? Because at the end of the day, if an asset works, an asset works. When it doesn't work, it will unwind on its own. When people decide they no longer trust Tether, they'll stop using Tether. If Tether functions as a stable coin and people are okay with that, it doesn't matter if it's capitalized or not. No one cares. So unfortunately, Miss James, the world doesn't give a shit. And it's just kind of funny, you can't operate in New York. Okay, so what? No one was operating in New York anyway. No, you can't do shit in New York. The only people that you punish by making these blanket punishments for New York is people in New York. It just makes them have a harder time doing business. It doesn't punish anyone else. You think these companies where these dudes live in the Bahamas and in Malta and in Sing, do you think they give two cold craps what the Southern District in New York says, what Attorney General, they do not care. And an $18 million fine is nothing. I can almost pay that fucking fine. So I guarantee you these dudes that have run a $24 billion scam, they can absolutely pay it. The guy, Arthur Hayes, is still literally on the run. He tweets once every 2 weeks, so they can't find his location because he's wanted in so many countries for all this old crap. No one cares, man. No one cares. According to the statement, the two firms made false statements. According to the statement, the two firms made false statements. Let's rewrite that. About the backing of Tether and the movement of hundreds of millions of dollars between the company to cover up the losses when its shadow bank Crypto Capital had its funds confiscated by police. Yeah, that was, a frustration, obviously. Did it affect the price of Tether? Nope. The statement referenced the OAG investigation, which it says found that from mid-2017, Tether had no access to the banking system and did not have reserves to back the Tether in circulation at the time. Yeah. Again, all stuff that we know, all stuff that no one really cares about. Cool. Isn't it weird that we don't care about that? But we don't. It's a nothing burger. As a result, Bitfinex and Tether will no longer be allowed to have any trading activities with the citizens of New York. Great. I'm sure the citizens in New York really feel vindicated. The companies will also need to provide regular reports on business functions. This is the part that I found the funniest. You're going to pay a fine of $18.5 million. Nothing. Yawn. And you're not allowed to operate in New York, but you're going to have to provide regular reports on business functions, providing clear details on the funds held as reserves. But if you're Tether and you've been kicked out of New York, and that's the extent of the AG's power, what are you going to provide? Yeah. Hey everyone, let's all stay late on Friday to make sure we get all the information for the AG in New York, the place where we don't do business. Go fuck yourself. That's so stupid. It's just, this is the problem. Instead of doing some kind of meaningful, constructive regulatory framework, for instance, let's let all stable coins fall under some system whereby you create some kind of statement on reserves in real time. Let us plug in, give us API access, and let's see what you've got at the banks, and we will do some kind of real-time analysis of stable coins. See, that would be meaningful. What New York has done is only punished the users in New York. Tether did not get punished. Tether makes those fees every minute of every day. So this whole thing's stupid. Anyway, Tether must provide public disclosures of their assets backing Tether separated by categories, including any loans to or from affiliated entities. Tether responds in a statement. Tether said it had not admitted any wrongdoing under the terms of the settlement. And I quote, the Attorney General's office concluded, in essence, that we could have done better in publicly disclosing these events. Contrary to online speculation, after 2.5 years, there was no finding that Tether ever issued Tethers without backing. Well, that's not exactly true. Or to manipulate crypto prices. Also not true, but that's fine. That Tether's going to say what they can say. Blah, blah, blah. Tether's basically saying, we got off scot-free. And you know what? They got off scot-free. Poof. Nothing burger. Tether acknowledged that it did make the loan highlighted by the NYAG, but that it has since been repaid in full. Tether said that the loan did not prevent the firm from issuing redemptions at any time. Yeah, because they just print up more money. They buy Bitcoin with it. They've ridden the Bitcoin train. They made counterfeit money. They bought Bitcoin. Bitcoin went up. Therefore, they could repay any kind of outstanding counterfeit debt. If you make a dollar bill, okay, think of it like this. Let me surmise what Tether did. They took $1 million and they printed it in their. They went to Home Depot. No, they went to Office Depot at night and they printed $1 million $1 bills. They went and bought $1 million worth of Bitcoin at like, $68 a coin. So yeah, they might not have had any backing for that $1 million, but the appreciation on their $68 Bitcoin has been what you might call dramatic, meaning they are now just fine. They're capitalized. They can print money until the cows come home. Why? Because they bought fucking Bitcoin at $68. Right? So it doesn't matter that they started as a counterfeit operation. It doesn't matter that it started as a Ponzi scheme. It doesn't even matter that it continues as a Ponzi scheme, because this space is growing so quickly that any scam they pull is capitalized within a month or two. I would argue that as scammy, as ridiculous, as nonsensical, as grimy and grungy and messed up as Tether is, they're still 100 times more capitalized than the US dollar. Maybe 1,000 times, maybe 1,000,000 times, right? So again, nothing burger. Oh, what's going to happen with Tether, with the Tether thing, nothing, because no one cares. And again, this gets to the greater question of kind of weighing out what is in front of you and weighing out what's behind you. Some people refer to that as headwinds, tailwinds, crosswinds. And one thing that George Gammon says that I like, I don't like everything that George Gammon says. He's a little bit anti-crypto, a little bit sour grapes, that he didn't get involved. And he calls everybody that likes crypto a Bitcoin troll, which is a little douchey in my opinion. But he has one statement that he makes that everyone should kind of file away. There are no certainties, only probabilities, right? If you are maximalist about anything, you're going to end up missing all of the things around. Nothing is black and white. Everything is shades of gray. And so what you have to do, these markets can be incredibly difficult to wrap your mind around, even just the technical machinations. But if you also are starting to try to weigh in headline risk, black swan events, news and this and that, you have to be very careful that you don't buy into the sentiment. What you have to do is, as an individual, you don't take anybody's advice, especially not me, right? My grandmother's strung out on meth. So you definitely don't take my advice. You read the news and you put it through your own common sense filter. And you say, okay, let me just try to get an understanding of what's going on. And is this a really big deal, or is this not a big deal? And you know, as an adult, anybody over the age of 0, you have these tools that you've developed, the same tools that keep you from driving into oncoming traffic because you realize that that's counterproductive. The same reasons you don't go smoke meth with my grandma because you realize that's counterproductive. The same reasons, that you do all of the things that you do that are productive, makes you a pretty good judge of risk, even if you don't know that you are. We're judging risk all the time. It's programmed into us to judge risk every second, every moment of every day. So let your own gut instinct be a good measure for what headline risk is and things like that. And I think what we've seen today is that the Tether headline risk doesn't really exist. Okay. That's about it as far as new news. We'll check prices one more time. Has anything dramatic happened? Let's see. Nope. We're still within like $70 of where we started the show. Bitcoin, 47,574, whatever. Ethereum, 1552. Cardano, right at 96 cents. Polkadot, 33.53. XR, XLM, they're both S-ing the bed. Cosmos is still up. Theta is still flat. Neo is still down. VeChain is still down, but starting to turn the corner a little bit. Graph token, $1.63. Near token, man. This is not financial. This is not any kind of advice. This is life advice. If you like Near, you like $3. You like it near $3. What? All right. Okay. Let me make sure I haven't missed any questions. Any decent questions? Okay. Yeah. Let's call it a day. You guys go have a nice one. Stay out of trouble. Don't do anything my poor, drunk, insolvent grandma wouldn't do. You know what? I would bail her out, right? Like, I've got cash. I could go bail out grandma, but I don't think that's going to teach her a lesson. And I think if we want grandma to come off of meth, I'm going to probably have to get her strung out on heroin. But, it's grandma, right?